Hey guys, this is Jim. It is 5:02 a.m. in San Francisco, California on August the 19th. I'm not a financial advisor and I never provide financial advice. So I'm going to do a deep dive into the whole indices and start with the UVXY for you guys. Um, we had a Discord call earlier in the week for the Anemoid Discord, and someone asked about UVXY. I told them at that time that I thought that it didn't look that compelling to me, that I thought I would um, wait until probably the first week in September um, before I really got excited about the UVXY on the upside. Uh, After spending about the past 2 hours going through everything, I'm wrong on that, and I'm buying the UVXY today. Uh, August 19th. I'm going to show you guys why. Here's the here is the 6 month chart on Anemoy. And so what I want to do is I've removed the weekly trigger just so we can see this a little bit better. It renders a little better as far as granularity. Then I'm going to tell you, then I'm going to return the monthly trigger and tell you why it's important. So on the 6 month chart, one of the first things I do if a stock, an index, or whatever, a ticker's in a deep decline and a multi-week, multi-month, multi-year decline, I want to look at the 6 month chart and I want to hover over the monthly velocity to see if there's a divergence, meaning is price posting lower lows while the monthly velocity is holding up. And in this case, you can see monthly velocity stair stepping, the dark orange vertical lines. Monthly velocity stair stepping, meaning that it posted its extreme reading low and then it's moving up month after month after month and improving against a backdrop of lower lows in price. That's a positive / bullish divergence, and it's a big deal, especially on the weekly level. I'm sorry, monthly level. Here's the weekly level. Again, divergences have formed, positive divergences, and so that's an indication that the price wants to move back up and revisit the weekly trigger. So it can be a combination of price spiking straight up or price moving up as the trigger moves down and they meet. You guys have seen how that works if you're familiar with the Anemoy terminal. Down at this daily level, again, these are solid divergences, positive divergences at the daily level. No, I'm not sure I said daily. But here you go again, series of divergences here. You had that nice spike. And again, you're seeing a series of divergences here as the price of the UVXY nosedives to fresh lows. What that's indicating is that price wants to move at least back up to the daily trigger. And in this case, that daily trigger is at $10.65. So, from 875 or wherever, we're going to have a move up today, obviously, if the indices gap down like they look like they will. But anyway, I am going to buy this. I don't consider that chasing. I don't care if it gaps up. I'm going to get started for sure and probably fairly aggressively, probably a full 75% of whatever I'm going to deploy. I'll talk about that in a minute. So anyway, in my mind, or to my eye rather, this is a really bullish setup in the UVXY. Now, if I render the monthly trigger, let's back up. So if the price moves up to revisit the daily trigger, we can see here that would be a 21.6% move from yesterday's close. If it moves up into the weekly trigger, which the indication also is that it should do that because of this positive bullish divergence, it would amount to a 69.7% move. More importantly, and where I think this thing's going, and then some, is to revisit the monthly trigger, and that would be a 719% move. I'm going to show you guys why I think that the UVXY could make a multi-1,000% move. And then I'm going to show you the types of moves it's made in the past, just so it doesn't sound quite so wild, some of these numbers that I'm showing you guys. But based on a Nimoy alone, you get a spike move above that weekly trigger, which is now at $14.85. And you can enter an air pocket. And, obviously there would be some kind of global macro panic type news. I mean, it could be coming from the U.S., but it'd be something that would affect, global macro outlook for, financial assets, whatever. So that's what that looks like. I'm going to show you guys now we're going to do a deep dive into some of the charts, and I'm going to show you exactly what I'm seeing here. So this is a 60-minute bar chart of the UVXY. You can see I've noted 819 UVXY screaming buy. So again, 875 closed yesterday. It looks like it's trading 902 pre-market. So, up 3.20%, nothing too crazy. And again, I don't consider this chasing, and I will be participating. So here's the again, the 60-minute UVXY. I'm going to go back in time and first of all show you guys the significance of this dotted yellow line. So if I move back, here's a point of origin, which is the morning of January 12, 2022. And then here is a low that was posted in April 21st of 2022. So you can see we've overshot that trend line. And just to get started, I would expect, a sharp move back above that, which would be about $12, $11.75, $12. Let me show you guys point of origin of all these retest levels that make me pretty confident that the UVXY can move up through that anemoy monthly trigger. That monthly trigger was a 700% plus advance if it's hit. I'm going to show you why I think this can move up multiple thousands of percent. So here's the first bogey. This is a retest at 2625 point of origin. If you guys want to check it out, would be late day on September the 21st, 2021. 2021. We'll continue to move back. Here's another retest. 3665 point of origin is going to be late session, July 19th, 2021. Here's another retest. This is going to be 10:30 in the morning on February 1st of 2021. That's $138.25 retest. Here's a retest at 169 point of origin would be, let's call it late session on November the 4th, 2020, familiar date. Retest at $218 point of origin there is going to be October 30th, 2020, late session. And then here's the 250, which is the one I kind of have my eye on. And this point of origin is late session on September 8th, 2020. So, looking at the 60-minute chart, I could, move to some even higher retest levels. I think this is the one that really has my attention, and I do think it's realistic, even though that sounds wild. So those are the retest levels. Those are the points of origin, so you guys can go look at those on your own time. Let me back up now, or back out and look at a little bigger picture. So this is UVXY daily. Okay, you guys, this yellow downtrend line, and I know that the nature of the UVXY with perpetual premium decay because of the way they invest in things to make this whole thing even semi work, causes trend lines and things like that to be called into question. I still believe they work based on watching this thing over the years. There's some nuances, but I think they're useful. That's why I put this thing on there. So here are the last three large flare-ups in the UVXY and sort of the potential that this thing has when it runs. So Q1 2018, we had a 350% run in a short period of time. Q2, I'm sorry, that should be Q4, right? Yeah, I blew that. That should be Q4, you guys. Q4 2018, again, a flare up, this time 275%. And then, of course, when the global government geniuses decided to lock everything down and decimate everything on planet Earth, we had this 1,300% move in the UVXY. Now, these are all split adjusted, prices. Reverse split adjusted. So that's why this thing looks like, a move from 107 up to 1350. This one looks like a move from, 430 up to 1500. Those are all split adjusted. So at the time, and I participated in these, and at the time, it obviously wasn't that expensive, right? These are reflecting reverse splits, so that's why the prices look wonky like this. Now, if we go back, and I'm sorry, I put 275 here. That should be 250 based on what we just saw. I think there is a 275 retest that I've tracked someplace. That's why that sticks out in my mind, but we'll just call it 250. So again, we'd be looking at, almost 3x what we saw during the lockdown. So again, I know this sounds kind of crazy as far as a target, but I really believe that can be seen due to a bunch of factors, but just it's such a house of cards right now compared to even what we saw right here. So that's the setup. Now, as far as the reason that I tend to either swing or even position trade the UVXY, which you can go all over the internet and search and listen to the advice from the smartest people on planet Earth, and probably 100% of them would tell you it's a day trading vehicle and never hold it overnight because of the perpetual premium decay. I disagree based on what I've seen or what I've been able to do trading it in the past. Now, if you catch it at the wrong time and you just sit through a grinding decay, that would be a really bad thing. But if you have any method to time the market, even if you're fairly sloppy at points, the fact that this thing tends to run away so quickly once it gets going, and especially with gap moves, if you were to day trade this, you can see that you just don't participate on, you don't come close to capturing the percentage gains that I'm showing you here if you're not long overnight and in sort of a position, right? So you could call it a swing, you could call it a position if it's longer than 2 weeks. I tend to call those position as opposed to swing, but you guys can see how many gap up moves there are here, and that again, you're not going to capture anywhere close to the 1,300% if on a day trade type basis. So that's why, for me personally, again, not financial advice, and something like this has extreme risk. But that's why, for me, it's made sense in the past. Now, my strategy I use as far as capital allocation is simple. It is, if I'm very convinced that my timing is solid and the move can be dynamic, I'll do 5% or more, but 5% is a pretty comfortable number for me of my total IRA. So 5% of my total IRA, I'm willing to allocate to a name like UVXY. If it goes to zero, which it's not going to do, even reverse split adjusted in the biggest bull market of all time, it would take a long time for it to go to zero. But even if it went to zero, I would lose 5% of my total, IRA, which I can live with in exchange for the potential to capture these types of returns. If I'm 100% in cash, because I think the market's risky or whatever, if I chose to be 100% in cash as opposed to being in the SPYs, something like that during a bull run, and then I simply allocated 5% of my total portfolio in the VIX and sat on it, and it saw a move like, this or like this, you can see, you can do the math. It moves the needle substantially on the entire portfolio for the entire year's performance, even though I have literally at risk only 5% of my total capital. So that's my logic. At least you probably would find 99.9 or 100% of the people much smarter than me in finance say that I'm an idiot and that they would never do that. Now you know my logic, and so decide for yourself if that sounds idiotic. It's worked really well in the past. Okay, so now I want to show you guys, let's see, what else have I got? Okay, here's the VIX. Obviously, if the UVXY is going to go nuts, the VIX has to pump. Here's a daily chart of the VIX with a couple different things I wanted to point out. The first thing I wanted to point out is this thick yellow line. And again, what this has in common with that UVXY chart is 2018. So there are a lot of things, there's a lot of systemic risk, I think, that's been built into the market and is reflected in the UVXY and some of the violent moves that it makes to the upside in the VIX. I mean, obviously the VIX drives the UVXY. So again, 2018, point of origin here is going to be the November 24 of 2017 low and the August of 2018 lows. So that's point of origin for this thick yellow uptrend line that I have locked into place. Point of origin on this speed line to the upside would be February 6, 2018 and March 18th, 2020. Okay, so you can see how well the VIX respects this yellow trend line. We have a nice sort of touch point there, move up, touch point, move up, a little bit of a sag below, but rattling around. And again, this is one of those things where we talk about pay me laters and things like that. It's almost as if, if a market respects the uptrend, you can get away with these little relief rallies. But if the market sort of plows underneath it and blows through stops and things like that, and fewer people feel like they need to have any hedges in place, that's when you get these types of moves. So obviously this is the brilliant lockdown again, reflected in the VIX. Well, if we move forward, you can see another touch point, the flare up, kind of rattling around higher highs during the flare ups, and then all the way back down to where we are right now. So, this is your reference point. So even if you don't believe that downtrend line I showed you in the UVXY is valid based on technical analysis 101 because of the underlying premium decay and the massive reverse splits and all the other stuff, even if you think that's a garbage trend line, here's a solid trend line that I just showed you in the underlying VIX, which is driving the other one, and make up your own mind. But to my eye, this is a logical place where we could see another flare up at the very least. These two uptrend lines that are thin yellow uptrend lines are point of origin from these two uptrends here. So this uptrend here, up, down, up, this one up, down, up, higher, high, right? So the point of including those is that these are considered nesting fractals within this larger fractal here. So the thick yellow uptrend line dating back to 2017-18, and then I showed you the point of origin on the speed line off of overhead. So this is considered nesting. I always do my white line. That's my primary speed line. I do the light blue for my secondary nesting speed line, nesting fractals speed line. And so if we get a move back above 25, which wouldn't take much, right? If you look at these flare-ups, all of them are well above 25, obviously. Even the smallest flare-ups right here, if we wanted to look at sort of this level here, it's high 24. What's that? That's 2509, right? So really 25 is when the flare-ups happen, all of these flared up above 25. Well, any flare up above 25 this time around forces a re-entry into this nesting melt up fractal and can take us, well, depending on the day, shoot your vertical bar. If it happened today, or this is today rather, if it happened today, and I'm not calling for this, but you would make contact on the speed line at $48. So the point is that not only do we have a nesting expanding megaphone melt-up fractal that would kick off, in theory, on a move above 25 and could accelerate to attack the speed line here. But that would also move us up. This technically was a dropout of the larger fractals. So any flare up in the future can move us all the way up to 125. Now, I don't think that'll happen until sort of October. Here's where my model sort of, you guys have heard me before talk about a lift zone or a sag zone. So in the very big picture of my volatility models, I track VIX and VXN, which is NASDAQ, and the Russell Volatility Index. I track all of these. And I even track the original VIX index, which was based on the S&P 100. It's based on the S&P 500 now. But anyway, a sort of my big picture model all the way up at the monthly bar and weekly bar level, I always refer to as a wet blanket, but sort of the overhead resistance in my proprietary indicators. It's not price based, it's behaviorally based. That influence lifts about October 20th. And so that's why I have this note, 1020, sharp lift, market can crash. Even if we were just to move up to the secondary speed line during October, that would be basically $52. And again, if we do a speed line jump of the nesting fractal and that becomes support, then we can move up to, we can see the VIX move up to 125 plus this year, but prior to year end. I'm going to show you guys how bearish September, October, November look now in the next view. So that's that. Let's bounce over to the S&P cash. You guys can convert all this stuff to SPY. I personally like to look at the S&P just because I've been modeling it for so many years. But here's where we are. When I started to generate the bullish data here and talk to you guys about the big rally the model's predicting into August, which has unfolded, nice tracking, I thought we could move up a full 76%, statistically speaking, historically speaking, on this setup I got. And it's sort of a temporary capitulation in my work. 90% of the time plus you have a full 76% counter trend move. So that's why I told you guys, down in here that we could move up a full 76% of this entire decline we could retrace. Now, if that's still going to happen, I'll tell you guys, if I see new data right now, I don't see a window for that to happen. And I'm going to show you why in a minute, and show you the zones of weakness that led me to post these dates here. I think what we'll see is a retest of 3420 into September, November, somewhere in here. Now, we just saw on that VIX chart that we could actually crash during October based on my setup. So, you know, if we're already down at this 3420 retest level, you know, during September, um, and have an opportunity to cascade straight through it during October, I'll obviously update you guys. But here's point of origin on this retest level. It's uh, November 4th, 2020. Again, I keep stressing this idea that the model says it wants to rewind all of the gains since the 2020 election for whatever reason. So that's sort of this bogey that's been set up and been in my mind. You guys can plainly see. You guys know how I generate these hidden retest levels now, so you guys can plainly see the point of origin there. So anyway, 3420. This is sort of my minimum target into these dates, September 14th through November 17th, and then as we move down toward these dates, assuming the model, the market tracks the model, which I tend to get even better tracking with a rising VIX. So the fact that we were able to identify this August bounce bodes well for the idea that we'll be able to hit on this prediction back to the downside. So that's what that looks like. Again, I'll tell you the other element there is obviously if you guys shoot that downtrend off of the all-time high posted in on January the 4th, and then this bounce high on March the 29th, and you shoot that downtrend. This one's not precise. We've missed it by a tiny bit. But basically, the market seems to be reversing or running into some resistance here, and based on that too, which is sometimes really, really simple stuff actually works, which is amazing considering the amount of work all of us put into this. So here's a SPY. I tweeted out to you guys, or I messaged out to you guys this morning about this zone of weakness. We obviously have, weakness into the 24th, 22nd to the 24th, and we're rolling over here in the overnight session and everything. Well, if we were to just move down on sort of a bear crawl of this, let me open this back up for you guys. I don't know why I chopped that off. So you guys can see this clearly defined downtrend, right? Here's the high, a down, a up, a lower low. So we can draw that off of those two touch points. So if we move down on a bear crawl, if the a speed line attack looks unlikely to me unless we're about to crash. Right off of this high, it's possible. That's why I listed these retest levels for you. But if we're not going to crash, then Monday, this is sort of logical to my eye, is 410.75 vibration into 8:30 in the morning on Monday, and that would fall into the category of bear crawl, right? And so if you break out above a downtrend line and then crawl down it, I just call that a bear crawl. So anyway, that's what that looks like, you guys. Eye on these retest levels, 393.40, 386.75, 382.25, and 378. If we start to move underneath this downtrend line, obviously that's a expanding megaphone crash fractal reentry, and we can accelerate and cascade through all these levels. I don't see anything right now that tells me that's a high probability, but keep that in the back of your mind, and I'll track things as we move forward. I think that is everything I wanted to show you guys. The S&P futures are off 41.5, so about a little under 1% right now. It's 5:31 a.m. I will message you guys to keep everyone up to date. Oh, I know what I want to show you guys. I wanted to end with this. I updated the charts here on the site. So here's the new data, you guys, and this is reflected on the forecast page as well. So a little bit strange that we came up a little bit short on this line, and I wouldn't count out the possibility of one more aggressive stop run. I don't really see where it fits in. As far as my zones of weakness, I don't really see the window for them to push through the highs, but that doesn't mean they can't do it. If they were to somehow push through the highs anytime in the short term, I personally will aggressively be buying longer dated puts. So here's the setup. Again, you guys saw where I think we'll be plunging into 8:30 in the morning on the Monday the 22nd. So we've got this zone of weakness 22nd through the 25th. We've got a zone of weakness into September 1st, zone of weakness into September 14th, and then we've got a big zone of weakness here. The fact that the VIX has that lift zone on October 20th probably means that I'm going to see some new data that's bearish in front of 1031, but as it stands right now, 1031 through 1117-ish is the nastiest window. I'm leaving this, 3,336 retest, giving back all the gains since November 2020 election. I'm leaving this here and thinking that it's sort of, October, November-ish, but depending on how aggressively, assuming first of all that the market tracks the model, depending on how aggressively we move into these zones of weakness will determine, these prices. You guys know how this works. So let's go with this 39.50 retest and 38.91 retest into this window here. We've got this uptrend line here in blue that'll be sort of supportive. That fits the idea of 3830 vibration and rattling here before it stair steps down to these two retest levels into these dates. And again, I'll adjust these price targets once we see how sharp the decline is, the trajectory of the decline. But that's it for now, you guys. I've updated all of these different charts. Screaming buy, which means a sell signal in stocks. Obviously, a buy in the VIX is a sell in the underlying stock indices. You guys see these retest levels in the VIX, which we've had on the board for a long time. Beautiful tracking, by the way. When we go back to this chart, beautiful tracking up into our August zone of strength, and then same thing, obviously. With the SPY hitting that 428.50 vibration level. So really nice tracking. And then here's the Dow. So a little bit of a throw over to this upper downtrend line. You guys know the rules on throwovers. It means that when price re-enters back to the downside, that you can get these really aggressive acceleration moves. It's one of those sort of oh shit moments. And this obviously was a big short squeeze. So anyway, you guys have known for a long time how bearish my Dow model is with these retest levels, obviously. So we'll continue to monitor all that stuff. But if we have a really sharp decline, 27,700s our very next downside retest level. We took care of 31,350 and that 30,975 in that first hard leg down. All right, you guys, that's it from my side. I will update you in the message section. Be sure if you don't want to visit the member page for these updates, be sure to go to the My Account tab and sign up to receive those email alerts, and you'll get those in real time. Good luck, you guys.